Good morning, friends. Thank you. Welcome back to this session of price action. To all those guys who have attended the previous sessions, and welcome to those guys who are attending for the first time. It's a great day. It's first session of the year, and incidentally, it's also the new year for a lot of us. Makar Sankranti. So from tomorrow, right, we'll start. So hopefully, with this, the change of the fortunes for anybody who is not making that good in the market starts with this new year, or anybody who is already making money, the continuation and consolidation starts. Consolidation starts with you guys, right? With this particular session. So without spending much time, thank you very much for joining this session. And we hope that by end of this session, you'll have a fairly good idea about price action, and you will be able to make some profitable trade out of it. But as we said that no concept or no indicator is perfect, right? There are certain pros and cons which I believe you understand, or if you don't, then there's always a probability which any of these indicators or statistics helps you to go beyond a particular point, right? So understand this particular session will also help you to increase the probability of a good or profitable trade. So with that, taking the price action session 1, right? So what are we covering in this? First is what is price action. Second, why is price action? Identifying price action, interpreting price action, usage of price action, advantages of price action, disadvantage, price action versus technical indicator. Briefly, we covered in the session that we had on 24th December, a few strategies on price action, examples, screeners and charts, and estimated time for this particular session is 2 hours. We don't want to be very strict or rigid with that. If there are certain questions coming in, we are happy to extend it to a little bit more, right? So, but what we are expecting here is 2 hours of the this session time, right? So what is price action? Price action, so basically understand it, right? Anything, any activity that you or any of the traders or institutions do on a stock that is likely to affect the price, right? So best is you do a trade that generates a price action, right? Also going slightly beyond that, sometimes you even don't do the trade, you place a trade based on the bid and ask. If you have noticed certain of your brokerage tool, right, which tells you bid and ask, that is likely to create a price action, or that's likely to create a different event, right? So price action is anything that is likely to affect the price of a stock is price action. Now, when you join a series of such actions, right, when you over a time, when you do it on a chart or on a plot, do it right, then that creates a price action over a period of time. Okay, so what is price action? Price action is the purest form of technical analysis. What it means is this is the latest and the greatest form of technical analysis with which you not only understand the market, you read it right on the time at the moment where it is happening, right? And then it being the latest and the greatest, that is likely to give you the best results in your trade. Okay. So why price action? Price action, number one, price action helps you to find the good entry and exit points. It helps you to forecast, or it tells you that where the price is likely to go. It is best suited for quick returns. It can give you really quick returns, or it can give you returns over an elongated period of time. It is crisp principle. Keep it simple and stupid. So if you have this strategy, it is a very simple strategy. You understand it, it's very simple. Keep it as the more simpler that you keep, the better or the more consistent results you are likely to get. So the overall idea of price action is keep it simple, easy to understand. Once you master it, it's very easy to spot, and you can make consistent results without spending a lot of time and energy, to try out different combinations here and there, right? Also, since it's simple, right, a lot of price action can be interpreted by a single candle. What that means is basically just with one candle. Just with one candle, you will be able to understand where this particular things, where the status of this thing is as we speak, right? Or the better thing is when you add multiple candles over a period of time, right? So one candle can give you some indication, two candles can give you better indication. Sometimes a series of candles, maybe last 10, 20, 50, 100 candles are like also gets you better confidence, should get you better confidence in how to use the price action to read the market. Okay. What does price action tells you? Price action tells you what the support is, where the resistance levels are. So accordingly, once you are able to identify those price actions, you will be able to understand the support and resistance levels, number one. And number two, once you identify them, then the entry and the exit point of a trade is much better, right? So price action helps you to find support and resistance level. Price action, a series of price action creates certain patterns. Based on the patterns, your basically likelihood of equity moving in a certain direction is much higher, right? So price action generates patterns. It tells you where the trend is or where the trend reversal is, right? It gives you breakout and breakdown. So breakout and breakdown are excellent either entry or exit signal depending on where your trade is placed, right? It also helps you to find the false breakout and breakdown. So remember guys, not every breakout or breakdown gives you accurate results. There are certain times where there are false breakout and breakdown. So once you get familiar with this price action, once you are able to understand the charts, you will be able to spot these breakout and breakdown in much more effective way. Okay. Pullback and retracements. So it will also help you to get pullback and retracements, right? Entry and exit points, right? Where to enter, where to exit your positions. It helps you to find the stop loss or trailing stop loss, right? So before we stop, before we proceed, right? Is there any question that we have here? All right, so I don't see a question. So the way we would like to, so that set the brief preface of this discussion. Before we proceed, right, I'll tell you that some of the things that we are doing. We try to keep this session as interactive as possible, like the previous session. Some of you who have attended, we would like to take all or any of your questions that were there, right? So feel free to ask questions, number one, and basically we'll take your questions and try to relate it as close as price action or the tool that we have to help you understand it better, so that you become pretty much well versed with these concepts. Okay. So identifying price action. How do we identify price action, right? First of all, as we learned in the previous session, number one is price action is basically series of price movement over a time, right? So looking at how the price is moving, it will give you a lot of indications or patterns which will help you to sort of forecast the movement of price. Of course, when I say forecast, it's not perfect, right? It's not perfect. It is based with certain level of basically probability with which it can work. Okay? Just hold for a second. Okay. Number two is charts, right? With charts, so charts help you to visualize these price action in much more effective way. There are multiple different ways of using charts. One is line chart. Second is candlestick charts. As we drill down into the session, we'll get better on it, right? Number three is the screener. Now, not everybody would be able to look at the charts in the same way as the others are doing or as the professionals are doing, number one. Number two is the limitations of using charts. Limitation of using charts is basically you can see one stock at a time. But if you have a screener which filters all the stocks on your universe and you get an alert on top of it, that is the best way of finding a stock of your choice, right? So basically with this preface, right, we'll continue with the other discussions, right? So what is price action? So to a layman, right, this will appear like a very simple chart, like any other chart, right? But once you become little proficient, once you become little proficient, then you'll be able to read this particular very simple looking chart, right, as a very powerful tool for your trading, right? So a smart or a proficient analyst would be able to spot multiple things. One is a simple short-term trend, right? Second is a short-term downtrend. Third one is a consolidation within this. Number fourth is a long-term trend out here. Number 5 is a chart pattern which is called double top. Double top is again a powerful pattern. Very briefly we have touched upon in some of the sessions before, but we have another session come on I think 4th of Feb, where we'll be covering chart patterns in greater details, right? But is again a very important pattern which can be easily spotted by a proficient analyst. Then there's a gap up. In this session, we'll understand gap up in lot more details. Then there's a pin bar candle, which is again a powerful sign for your trading decisions. Then there's a gap down. So a very simple looking chart, right? For an average or a novice trader, there are lots and lots of opportunities for proficient traders, right, within this particular single chart. And the chart is also pretty recent chart, right? So the idea of this session is to be able to spot or to help you to spot these things in much more efficient and easy way, so that you can generate a profitable trade out of it. All right. So usage of price action. It helps you in swing trading, intraday trading, scalping, even long-term trading. Then there are certain advantages of price action. Number one is, once you are able to spot, like in this previous chart, once you are able to spot it, then or once your eyes get tuned to this, then spotting these patterns or signs is much easier, right? So it won't take a lot of your time to read these things, and you can use it. You can spot it easily, and then you can immediately get into trade, right? So one of the advantages that we mentioned is research time is minimal. Number one, it gives you very good entry exit points. It's leading in nature because it is the market, right? Price action is the market. So there's nothing more sophisticated than this, or nothing more what I'll say is more timely than this, right? This is the most timely indicator or signal that you can get it. Easy to spot trend. Once you understand price action, you don't need to be dependent on anything else. So just mastering one single concept. Again, this concept is not very easy to master. It takes certain time to master, but once you do it, you don't have to depend on anything. You don't have to look at other technical indicators, fundamental indicators, news and other things. Just by looking at it, you'll be able to do very good. Then some of these patterns can easily be tested, and it is very simple. Right, to use. There are certain disadvantages. We'll take the disadvantage part at the end of the session, right? Or basically typical cautions. Just for the sake of completeness of this video, I'm just flashing it for 10 seconds or so. Right, we'll go in details in the later part of the section, right? Price action versus technical indicators, right? There are certain differences between the two. Again, we'll take this towards the end of the session in greater details, right? So, so price action, as we said, right, it's the purest form of technical analysis, and it is very much part of technical analysis, right? So we'll take a moment to go through what technical analysis is and what are the typical principles of technical analysis. So there are 3 basic principles of technical analysis. Number 1 is price discounts everything. Number 2 is price moves in trend. Number 3 is history repeats itself, right? We'll drill down to each one of them for a couple of minutes for you to get you to know it, or if you already know it, then perhaps it will be a sort of a revision, right, for you guys, right? So what is price discounts everything? Now, see, basically everybody looks for a value which is a fair value, right? On every equity. Whenever you look for something, whether you look to buy a house or you look to buy any asset, right? What you'll try to look for is what is the best value which I can get it, right? That is the fair value. So in fundamental analysis, there are a lot of different mechanisms to generate the fair values, discounted cash flow, excess return model, and many more, right? In technical analysis, what we believe is efficient market hypothesis, right? That means price discounts everything. Or in a very simple words, right? the price at which an asset or an equity is trading at that point of time is the fair value, because it considers everything in the market. It considers everything in the market. Number one is the demand and supply, the most basic stuff, all the company related information, corporate actions, company news, global macroeconomic factors, everything is included in the price at that particular point of time. That means the price at which stock is trading at that moment is the right price, or based on all the factors which can affect the price, right? That is so you don't have to look at anything, right? So just look at the price movement, try to understand the trend, support, resistance. Based on that, you'll have a very good idea that, and you can get into a profitable trade or get into trade, right? Number two is history repeats itself. So price, even if it were to move from 1 rupee to 100 rupees, right? It will not move in a straight line. It will move in a certain path. So let's say if it were to move from 1 to 100 rupees over a period of 5 years, you'll see that there are a lot of movements happening and will keep on happening. So history repeats itself, wherein there are 4 different important phases. Number 1 is accumulation. Number 2 is markup. Number 3 is distribution. Number 4 is markdown. These are 4 phases. Now, depending on your level of expertise, you will either enter or exit in different phases, right? So the best is to get into accumulation phase. That's where the most money comes in. So that's where the smart money comes in, right? So accumulation phase, so price typically moves up, then comes down, then again it moves up, comes down. The movement of move up and down may not be 100% same in terms of the value. It may differ. And if it is an uptrend, then the price is likely to move up more aggressively compared to when it is coming down. That is higher high, higher low typical pattern, right? So let's try to understand what this particular thing is, right? History repeats itself. So we have a very simple example. Here. So what happens is when the price is on when the price is really on a very, very boring zone, a lot of people feel that it's a boring zone or it's a consolidation zone, right? That's where anybody who feels that this is a value stock, or this is a time where you need to get in, right? So what you do is you start accumulating this, because you foresee that the price is likely to go up. So when this thing happens, right, there's a small movement in volume. It does not move very, very aggressively when it comes with volume, but it starts moving. This is where the smart money comes in. Once the smart money is coming in, right, they're slightly lesser informed people. So these are well informed people. Slightly lesser informed people also try to get those information, which will take the market really high, right? So this is the phase where the smart money comes in. Slightly less informed people also come in, who also makes money. Then it takes the price to a level where it cannot sustain based on that current situation. So what happens is the weak money comes in here, right? So if you see, the volume is pretty good when the smart money is coming, and when it is going up. Ideally, when the price is going up, the best signal is you check with volume to see the conviction of the market in terms of the price movement, right? When the price movement is going down, that means the conviction of market is not good, and this is where the weak money comes in. And the weak money once the weak money comes in, smart money goes out, or the profit booking happens, and the stock goes down, and again there's an accumulation, markup, distribution, then markdown. So this cycle keeps on going. So this is where the history repeats, or the price or the price moves in a trend, right? You'll see a lot of uptrends, downtrend, mini uptrends, mini downtrends, and so on and so forth, right? So this is how typically the stock moves, right? Number 3 is again a very similar example, but in terms of a human psychology, right? So if you see out here, this is where it's a very boring phase. The stock is not moving. Lot of people like us will get restless out here. A lot of people will get restless out here. There's nothing much coming out here, right? Let's quit and let's go into a better looking area, right? Not a bad thought, but also at the same time, what you should be looking at is basically whenever there's a consolidation, right? Consolidation is a very good level. This is a game of eagle. You keep on waiting for your prey, and you try to spot. Once you are able to spot certain things, right? This is the typical phase where you get maximum. So if you see, there's certain areas where there's a good price movement along with volume, right? That means some of the institutions who are convinced that this stock is a good stock, right? will keep on entering in a very, very small and easy way so that it doesn't disturb the overall price, right? Once it disturbs the price, then the opportunity to buying at a small period or at a value price is much lower. So basically the smart money keeps coming in without affecting the price, right? Once the slightly lesser informed people come in, again, when I say these are again informed people, smart people, perhaps you will reach from this phase to this phase, but with this kind of sessions, right, you'll be somewhere around this phase. You'll see that money is continuously getting in, right? So the smart money or slightly less informed people also start coming in, right? Now the people who have entered here, right, will see that, you know, market has already gone to a level which is little up, right? So these guys will keep pulling the money out. So the common man, what happens is, common man will see that, you know, price is going up, and this is where a lot of analysts will keep coming, right? You can't blame analysts because the expectation sets on analysts for either TRP or anything is so high that they have to give 2 or 3 or 4 or 5 tips a day, right? So what they typically do is they try to give you something which is really in a motion, in a very, very strong motion, right? So you'll see all the news and all these things, all the buys and everything, right, will come out here, right? Now this is the phase where you'll see that the price is going up. So you see price from somewhere around 40, it has gone all the way to 100, right? So the entire attention is here. This is the phase where the euphoria comes in and the weak money starts coming in. The common people, all the common money starts coming in. You'll see that the conviction in the market is much lower when it is going up, right? So these are certain levels where you should try to avoid it. Part of price action, price of technical analysis, I'm spending some time on it just to, you know, give you the importance of certain movements or importance of identifying the price. Don't rush on a price which is simply going up. Because there's a limit up to which it can go up, right? So all those guys, so there will be a lot of these guys who will be buying it, typically pretty naive people, right, who doesn't understand this particular set. So that's why we are spending some time on it to understand this particular part, right? So it goes into extreme overbought level, right? Once it goes into overbought level, it's simply not sustainable at that level, right? So more and more people, so people who have invested here perhaps would go out, people who have invested here will do profit booking, and the price is likely to go down. Now this is the place where anybody who feels that, you know, they have missed the bus will try to get in. So the fear of missing out will come out here and they'll try to pull the market up again with much lesser conviction, because these are all individual set of people, right? Very less capital and less information, right? So they cannot really pull the market out, and again it's not sustainable and it comes down, right? So these are typical human psychology where things come in. Like there's a lot of greed which comes out here, there's fear which comes out here, right? There are certain people. So the idea of these kind of sessions is to give you a lot of information about how the market typically works, right? For you to try to spot these things, and turn out to a profitable trade, right? So typical entry points and typical exit points. Okay. Now price action basics. What we'll do is we'll understand charts. Somebody has mentioned Heikin-Ashi charts. Yes, we'll take those things also, right? So understanding of charts. What is support? What is resistance? When we say these things, also we'll try to tell you that how to spot these things. What is breakout? What is breakdown? False breakout, false breakdown, trend line, patterns. And then obviously once we complete this, we'll also go into certain trading strategies and how to use these trading strategies in your real world. Okay. So, all right, chart types. Now there are two very basic kind of charts. One is a chart which just plots one point, which is the close price on that particular period, right? If it is a daily chart, it is the price at end of the day. If it is 1 hour chart, it is like price at end of the hour. If it is 15 minutes chart, it is price at the end of 15 minutes during the trading period, right? This is very simple chart. It just gives you the price movement. Useful, right? Useful to a lot of people. A lot of people rely purely on this because they really wait for the event to complete before taking a decision, right? Works very well for mid-term to long-term, right? Now there's another kind of a chart which is again very similar, but instead of just plotting the close price, it plots open, high, low, close also, right? So looks little overwhelming. Maybe in the next slide, it will become a lot more easier for you to understand, right? I see a question or two coming here. Let me see what those things. will show how to use screener for these chart patterns? Yes, sir, we will show. Right? We will show how to use the screeners for chart patterns. Okay. Now, so the second chart that we mentioned is candlestick charts. Now, what candlestick chart shows you is instead of just so in a line chart, you just plot the close price and you join all the close all the close price to create a chart. Whereas in candlestick chart, what you do is on any period. So, for example, on a daily tick period, this will be the price at 9:15. This was the price which was lowest in that particular day. This was the price which was highest on the day, and this price is the close price, right? Now, if the close price is greater than open price, if the close price is greater than open price, it is represented as green, or you can use your own color also, but most standard colors are green and red. The second candle, so this is called bullish candle, which tells you that when the start of the, so market was more bullish at end of the time compared to the start of the period, right? So when it ends, right, it should give traders a better level of confidence that where the entire basically the demand and supply zone was. So basically the demand was much higher at the end of the time. Just opposite of that is when the market is opening at a point and closing below that particular point, right? So this is where the bearish or the bears have taken bigger control on that particular trading period, right? And it is represented as red candle. Okay, support and resistance, the second point, right? Now, support is a level where there is a lot of demand. There's a lot of a demand at a particular price, which is stopping it to fall from that particular level, right? Now, there are various different ways of finding support and resistance, but for very simplicity, simple understanding, for very simple understanding, just consider that a point or a level where there's a lot of demand, right, which is not letting the price to fall below a particular point, that is support. Resistance is just opposite of that, at a certain level where there's a lot of supply. So demand can be part of anything, right? We don't have to really understand, but that the demand can be based out of a fundamental analysis, it can be based out of news, it can be based out any corporate action or anything, right? Or any other analysis or any other technical analysis or fundamental analysis, right? Same thing is resistance, where there's there's a point, it can be a Fibonacci extension or a level, or it can be a real overbought oversold level of technical analysis, can be any of these things. From price action perspective, what you need to know is basically what is support, what is resistance, and then you should use them for your trading decisions. Okay. So typically so in a very simplistic world, we have plotted a typical rectangle pattern or a channel, a horizontal channel, right? Where you'll see that this is the level where you see lot of supply. This is the level where you see lot of demand. So the price is not falling below this level and price is not going above this level, right? So these are very simplistic. These are very simplistic form of sorry for that. These are very simplistic form of representation of support and resistance, right? Now, support and resistance, to understand this thing, right, why these are so important. So if you see in this particular example, there's a lot of conviction at this level, there's a lot of conviction at this level. That means at this level, just looking at these things, right, first of all, there's a lot of conviction that there's a lot of demand at this place, right? Technical analyst comes on top of it, technical analyst would come on top of it and see that, you know, these are good support level, right? So apart from the general market movements, right, technical analyst also will try to buy at this level, trying to take it higher, right? So multiple factors come in. So without technical analyst coming in and making the trading decision, it's also already in a zone. Just observing that, technical analyst will also try to take advantage of it and try to take it further up, right? So they try to multiply the factor, right? Or they act as a catalyst on a certain support and demand level, right? So just trying to understand this in a slightly different world, For some of those guys who have attended 24th session, will be slightly boring or repetitive, but for those folks who are attending for the first time, trying to explain in a different way. So this is where the typical, we have taken an example of a typical battle zone, right? What happens in a battle zone? You have two different basically defense working against each other. Each of them, what they do is they create a certain trench. They have enough supply of food, water, weapons, right? So that they can hold this position for much stronger time. The moment they come out here, these guys will start shooting them, right? So this is the area where a lot of movements will happen, but crossing this level is much more difficult because of the comfort level of these guys, right? So in a technical analysis world, consider these as a different support levels, right? This is the level where there's a lot of demand, right? Once this level is broken, right? Once, let's say, once the support guys break this level, they have an advantage. First of all, they have an advantage of psychological advantage that they have broken this. Now this will become more like a purely on military terms. These guys will be able to occupy this comfortable position of a very, very safe place, either a bunker or a trench. All the food supplies, these guys will get it, right? So the next level of fight will be between this guy and this guy, right? So what was the fight, or the no man's zone was this, or the consolidation area or was this, right? From there, it will move to this level because of the psychological impact, because of the change in the circumstances, right? So what was typically the support level here will become support. What was the resistance level here will become support level, right? So in the next illustration, what we have is the price will move in a particular area in the resistance. Once the resistance is broken, then the bulls will go and have this particular place at a very comfort level, and this will act as a next support, right? So this is a very simple illustration. Then the price movement will act, or basically the movement of price will act on this support and this resistance level, and the zones completely change, right, from this example. So maybe it's the reason of mentioning this thing is much easier to understand anybody who follows. Now this generation is purely all the gamers, right? So, and a lot of those activities thought of explaining it in this particular terms, right? Because of the easy way to correlate this particular stuff, right? So support, whatever the resistance was, will become new support level. Okay. Breakout and breakdown. So what happens is once the resistance is broken, right, then there's a very good likelihood, or there's a new fresh sort of demand at that particular level, because this level, you remember, there's a lot of supply. Once those supplies are exhausted, right, then the bulls with all those trending and motivation comes and tries to break it to a newer level, right? So this is typically the breakout is, and once this is broken, as we said, that resistance becomes the support, right? So there's a change of the trend direction, right? Breakdown is just opposite of breakout, wherein the support becomes resistance, right? It goes in the negative direction. Okay. Now, basically, where do you see these support resistance levels, right? Where do you see support resistance? So what we'll do is we'll take you to certain screeners. Some of you have mentioned in the session, right? Would we see the screen? Answer is yes. Yeah, right. So we have these screeners, right? Where so basically we have two kind of screeners. For somebody who is not very familiar with the system, we have two screeners. One is pre-screen, which is basically pre-created screener for most of the common analysis which analysts do, and second is custom screener. So we'll go into the simple one first, chart pattern screener. In the chart pattern screener, we'll go into trend lines, or we go into basically we go into channel. In the channel, we have NSE 500. Let's go into rectangle channel, short term. We go into NSE 500 stocks. Okay. In NSE 500 stocks, our team has shortlisted few stocks, right? So I'll take those examples to give you better illustration. You can use any of these examples, but these will give you better understanding, right? So Shri Cement is one of them, where it is in a typical zone, right? Supply and resistance zone. So there are a lot of time where it is in this particular area, right? It's coming up, going down, coming up, going down, right? So multiple support levels, multiple resistance level. This being one. The second one, which they have mentioned out, is Bajaj Auto. Bajaj Auto, again, this is in a typical zone where there's a lot of support and resistance, right, at that particular point. So this would be a good entry and exit point, and you should be looking at breakout or breakdown, right? Similarly, looking at some of the slightly longer term pattern, mid-term patterns, the example the team has brought out here is MRF. You see that this is a very nice zone, right, where there's support and resistance. So typical rectangle pattern is there, and this is where the price is likely to move. Unless it breaks out either support or resistance level, this will be a good place to look at, right? Now, what we have done so far is just taken examples which were created or which were shortlisted by some of our analysts. But typically what you will be getting is, right, very, very honest and open, that not everything will give you the best quality results. For example, just look at first stock which comes as Aster, right? It is again in the same zone. Then if you want to look at the next stock, you don't have to go back into the screener. What you can do is you can simply navigate the results out here, right? So you'll see multiple different support and resistance zones. Not everything is perfect, but the software tries to give you enough enough listing from which you can start observing the system, right? So these are typical support and resistance level which software picks up, right? So these are certain things which we thought of sharing with you. So yes, the screeners are here. The screeners, you go into pre-screened, chart pattern screener, go to channel, go to rectangle channel, and you will get all these screeners out here, right? Number one. Number two is we are looking at breakout. So rectangle channel breakout, okay, and looking at short term on NSE 500, there's none, okay. Falling channel breakdown, okay, we don't see their breakout, right? Let's see descending channel breakout. So let's try to see some stock, right? So this is a slight channel where it is coming down. So same thing is the channel, again we'll have a session on channels on 4th of Feb, right? But you'll see that it is very similar to the rectangle, but instead of the horizontal level, it is forming a trend line, and it is forming a trend line, and this is where it is breaking the trend line, right? So when you look at the trend line out here, right, and you see our trend line out here, right? So this is again a zone of this thing, basically support and resistance level, which is here, and then you'll be able to screen these things also. Maybe a better breakout. So this looks like a better breakout, right? So when you look at this thing, right, so this is the level where it has really given a breakout, and also the breakout is given with much better volume, right? So that should add more conviction to this thing, right? So example of a breakout and breakdown are these. Let me also try to find something at random, right? Maybe medium term. Breakout is little more difficult because the market direction is not so good. Let's try to see a breakdown. Okay, there's a breakdown out here, right? So from this channel, right, so basically if you look at this price, if you look at this zone, this is a typical channel zone, right? You see this is a typical channel zone, and it has given a breakdown from here. Again, it's coming with a decent volume, right? So that should give you some conviction. Okay. Please provide stock symbol. So there's a question, right? There's a question. Let me see what those are. How do you will show screener for these chart patterns? Yes, we just did, right? Please provide stock symbol against the stock name. So basically what we provide, right, to answer your question, what we do is basically one is a simple or the standard set of data that you should be looking at. The second thing is you can create your own template. When you look at these templates, right? Maybe if you look at, so what you can do is instead of these standard set of columns, you can have your own custom columns. So that's where you can see the code also, right? You can see the code also. So for example, if I'm just using industry and sector, if you want to see the industry and sector also, where it belongs to, so you'll see that industry and sector is here. Similarly, you can create any template that will add either as a prefix or a suffix set of columns along with this. For example, if I want to add financial ratios out here, right? So you see that apart from the results of the standard fields, you'll see that some of the financial ratios are here. Again, the set of ratios are not limited to these. You can customize to any level, right? So for the sake of simplicity, won't go much deeper into those things because those are different aspects. It will deviate us from price pattern. But to answer your question, sir, you can always customize a set of columns that you want to see as a pre or post columns, right, over here. Any other question? What is the difference between falling rectangle and lower high and lower lows? Yes, Swapnil. So basically, falling rectangle is basically it is with a trend line, right? It is with a trend line. In subsequent session, we'll see the trend line. Whereas higher high, higher low, lower high, lower low, it doesn't typically form a trend line, right? A very aggressive higher high, higher low. Very aggressive higher high, higher low will never form a trend line because it will be moving much faster. We'll try to see those examples in coming sessions, right? How to plot DIY? We'll explain that, Asif. We'll explain that, and how to know the volume accumulated in the particular stock. Maybe so volume representation is out here, and then we have certain volume indicators, volume based indicators like in money flow, accumulation, distribution, and more of volume related. This thing is there. You can draw moving average also on volume, and you can screen those things also on volume. Okay, so going back to this one, so what we have learned is the support, resistance, breakout, breakdown, and their screeners. Right now, not every breakout, as we mentioned, right? Not everything which gives you signal is definitely going in that particular direction, right? Sometimes there can be a false breakout and false breakdown. It can be based on a one-off activity, right? Like let's say there's a certain institution based on whatever their learning is there, right? They have to buy a stock at whatever the price is at that point of time because of their conviction. So price can momentarily move up beyond that level. So in this particular case, what you see is basically there's a breakout, but the breakout didn't sustain. So this is typically called as a false breakout, and then price cannot sustain at that level, and there's a slight variation of a tweezer pattern out here, right? So very soon you'll be able to understand a lot of patterns out here, right? If you see there are multiple different patterns for, so this is a tweezer pattern which is a negative pattern. So you do see a lot of false breakouts. So not every breakout will give you 100% guaranteed results. The results quality and guarantee has to get better with your different trades. Okay, so false breakout. Similarly, we have an example of false breakdown, right? This was looking like a pretty good false breakdown, right? It's coming with a lot of conviction. The next day also the market was low. It was all giving good sign, but market didn't sustain. So that's where the stop loss is very, very important in looking at these things. Okay. So before we go into types of trend line, let me see if there's any question out here. If you implement it, channel patterns will be visualized better. Yes, Sandeep, we have implementation of channel pattern also. We'll cover that. Okay. Then can you share relative strength index? Girish, we have had a separate session on RSI on I think last week of December. We may be having another session, but what I recommend is it's a very, very exhaustive session, very, very detailed session with a lot of strategies, 10 plus strategies. You can go back and look at the video, right? We have published those videos. Okay. So now looking at the trend line, right? Some of the questions which also came out from there is like basically a difference between channel and higher high, higher lows, right? So we'll see, right? So basically stock moves in three different trends. Number one is uptrend, where the stock is making continuously higher lows, right? Second is downtrend, where the stock is making lower high and lower lows, and second is sideways or the consolidation market, where the market moves in a particular, it doesn't move in in one direction for a long period of time. It goes up, comes down, goes up, comes down, right? We'll see those examples to understand it better, right? Uptrend is where the price is making higher high, higher lows, right? Now the difference between this versus rectangle, somebody mentioned, right, is when it makes lows, right? When it makes lows, you will be able to draw a line with all the lows, and the line should be nearly straight, right? It will not be 100% straight, but it will be nearly straight line, and this is called as a trend line, right? This is called as a trend line. So price is making higher higher lows, but the bottom is or the bottom level is almost in form of a straight line, and this line is acts as a dynamic will act as a dynamic support level, right? So where should you enter when the price is very close to this level? This is the point where you need to enter. If and where should you exit? In this case, there's no uptrend line, right? Of course, in this illustration there's an uptrend line, but it may not be there. So in a typical uptrend, what you should be looking at is a support level, and you will get multiple different points, right, where you need to come in. So this is a uptrend line. Similarly, there's an example of it in real world. We have got an example. In this particular case, the stock is making higher high, higher lows. If you see, guys, there's no straight trend line, upward trend line, but the bottom is trying to retrace from a level, right? So multiple times it is trying to retrace from here, then again here, right? So any level around this would be a good point to enter, right? Again, keep a stop loss. I'll keep on mentioning the same thing again and again because it's very important, right? Because it's not a guarantee, it is a probability with which the price can move in a direction. Okay, so this is an uptrend, and this is where the trend line will come into picture, right? Similarly, do we have an example of the trend line? Let's see in our charts, right? So taking you to some of the real world screener out here, going into trend line, going into a rising support line, right? Rising support line on we'll go into NSE 500. We are already there. So the examples that we have is solar industry. Solar industry, when you look at this example, so it's forming a nice line at the bottom, right? It's going up, coming down. So when you draw a line out here, you'll see that it's giving you a trend line, kind of a trend line, right? With multiple different points coming around this level and then going up, coming at this level and going up, right? So multiple. So this will be a typical trend line, right? Another example that we have is Finolex. Finolex is it industries, okay, right? You look at this again. There's a tendency of this stock retracing from a level, right? What happened? Right? So it has a tendency of going from that level. Again, it has bounced back, right? So this can act as a good trend line, right? Or in an uptrend. So whenever it is coming down, it is giving you opportunities to buy at a multiple different level. It is an uptrend. So buying on depths would be a good idea, right? Similarly, there was another trend line which was up to this level, right? You see another trend line which can be plotted. But with this trend line, depending on what you are looking at, this is a breakdown. So with practice, you'll be able to see. So one trend line was a long-term trend line. The second trend line, which can be plotted out here, right, with multiple points. This is a breakdown. So now it depends on the kind of understanding you have, the kind of period that you are looking at. If you're looking at a short-term period, much shorter term period, then this will be a good breakdown, right, of you to sell this thing, right? Another example of a trend line on a medium term that our team has found out is Apollo tires, right? So this is again a nice trend line. Another example that we have is Bob, Bank of Baroda, right? So again a nice trend line, right? doesn't necessarily mean that you have to go with the example. In real world, our analyst will not be able to give you examples, right? Because that's not what we do. What we do is we provide good tools, good tutorials for you to trade. But in the real world, when you look at this, you'll find a lot of examples. This is completely at random, right? Where you'll find all these examples. This will give you the starting point of you to further analyze, and depending on your conviction on that particular charts, you can look at it, right? So the advantage over here or using these kind of screeners is basically it'll give you almost like 70-80% things ready for you to focus on the further analysis that you should be looking at, right? Again, these trend lines charts are very subjective. What it appears to you may not appear to the other one. You saw the previous example. In one example, it was a support trend line. For the other to some other people, it will appear as a breakdown, right? So it is very subjective, right? You just can't see that, what analyst A is looking and what analyst B is looking. They may be completely different. Okay. Now there's a question out there, which is difference between from perspective of channel module, real beginning breakdown point for the channel last point, the price falls sharply, not at the earlier peaks. Yes, Sandeep. I mean, you have to analyze a little more on that, right? If you implement channel pattern, will be visualized better. Yes, we have implementation of that. Then we have, can you explain between tweezer top and tweezer bottom? Yes, Nagaraju, we have this in afternoon session. We have good examples about tweezer patterns. What is difference between short, medium and long term, right? Short term uses last n candles, where the candles would be around 10 to 25. Medium term will use about 40-50 candles, and long term will use somewhere between 50 to 300 candles, right? So long term, if you're looking at the long term, for example, let's take an example of long term, right? You see the period where it typically takes you to, right? In this case, if you see January 23, it goes all the way to May 20, right? So when you look at this pattern, right, it's a very long term pattern, right? So depending on the kind of trader you are, right, you see the pattern, it's continuously giving you that kind of a signal, right? It's a very long term. So if you are a long term player, then perhaps you should be looking at these long term things, or 200-day moving average, or a weekly MACD, things like that. On a short term, you'll see the charts are not very long. Charts are somewhere between November and December, right? Or at most up to September, not very long term. So it tells you that number of basically ticks it covers. Okay. Kamran will go into technical analysis. I know your question is on technical analysis, but we want to keep focus, otherwise we'll miss the timeline, right? 3 minutes morning star, we'll go into details later, right? Trendline will help in positive or negative event of surrounding. Yes, trendline will help you on those things, right? So these are typical examples of trendline that we thought of sharing with you. They're very important. Downtrend, just opposite of uptrend is downtrend. We have screeners for downtrend. So go to pre-screen where we went, and then you'll be able to spot them. A typical example of downtrend, just opposite of uptrend, is out here. I'll give you a few seconds to look at it. Right, sideways. Sideways is basically sideways is consolidation, where the price is moving in a certain range, right? It moves in that particular range for quite some time, right? We have an example of sideways just to give you a little more the insight about it, right? So we go into sideways trend. We have pre-screener, and then we'll go into horizontal trend line. We go into horizontal trend line. In the short term, we have divi slab, right? You have a divi slab. You'll see it's pretty much in the sideways market, right? This particular stock is in a sideways market. So you can spot these things and then wait for a very good breakout and breakdown, right? Wait for a very good breakout or breakdown. The market is pretty much in the sideways, right? So this level, if you see, it is low of this level. So if you draw a horizontal line, the previous support is typically acting as a resistance out here, right, in this particular example. So that will also be pretty useful for you to understand. The other example we have in a midterm, right? Midterm, the example that we have is Piramal. Okay, NSE 500, no, we don't. Wipro. Okay, right? Look at the stock, it's pretty much in the sideways market, right? On this horizon. So depending on what you are looking for, right? Sometimes the short term, right, would be looking purely on this particular part, right? So this will be a typical double bottom for them, right? For somebody who is looking at a slightly longer period, they'll find this as a rectangle, right? Two line coming here versus coming out here, right? So depending on what your time frame is, if you are looking at a very short term trades can give you good benefits. Long term trade will also give you good benefits, but with lot less involvement in the stock, right? Depending on how much time can you spend, you can look at different time frames. Okay, so these were all the trend lines that we covered, right? So there are a lot of examples that we covered, right? Now coming into some of those things, having understood the support, resistance, breakout, breakdown, trend line, trends, right? All the key aspects. Now we go into some of the price action strategies. Okay. First is OHLC strategy. So basically in this particular part, we'll take very simple strategies, and then we'll go into much more complex strategies which you can build, you can understand, build, and also screen in top stock research. Right. So some of the strategies that we'll be covering is OHLC strategy, gap up, gap down, gap up, runaway, gap up fill, gap up, exhaustion. Okay. So going with the OHLC strategy, number one is where open is equal to low, right? Where open is equal to low. So remember guys, in the candlestick, we have 4 points: open, high, low, and close representation. When open is equal to low, what it means is basically when the price opened, that was the lowest point on that particular time frame, right? So and then so there was not much of, so typically leaving this particular example, right? If you just look at a point where open is equal to low, for example at this point or at this point, when the market started or this particular time frame started, right, there was some optimism or no optimism, but during the course of the trading period, it is day, week, or month, right? Market continuously moved in one direction. Market completely moved in one direction, which itself, one single candle. You remember in the price section we referred that a single candle can give you a lot of meaning. Also, combination of candles, right? In this particular case, a single candle tells you that price opened at a point and it moves only in one direction, which is upward direction, right? Of course, there was a small wick out here, but the general mood of the market was bullish, right? Once such pattern is there, right, the general sentiments would be much more bullish, right? That's where you can get into the trade, right? So in this particular example, there are multiple other factors which were also affecting us. There's a gap up, there's open is equal to low, and then there's a confirmation pattern and the price actually moved up in that particular direction, right? So this is one. The second one is just opposite of that, right? So before we go in there, let's see how do we screen these things, right? How do we screen these things? Open is equal to low. Now, like any other thing, we have a preset of screeners where you can get this, or it is OHLC screener is common screeners. You go to common screeners, you have OHLC screeners. That is where you'll get open is equal to low or open is equal to high, right? In the bearish one. So open is equal to low. You go and look at any area. You'll find the stock where the open is equal to low at this period. That means it is coming out here. Market started at this level. Before that, there was uncertainty. A doji pattern was there. It started and then it moved up. And during the end of the market, there was a lot more conviction that it's going up. Right? A very simple example, not a great example. This looks like a lot better example because there's a pin bar out here. It started here, a big candle, right? And then it's likely to go at least to this level, right? The next resistance level at a very easy or simple resistance level would be somewhere here, right? So if you enter here, there's likelihood of it going up. Volume is also pretty decent. It can go up, right? A very simple example of showing these things in in our pre-screened. Similarly, equivalent of that is DIY screener. DIY is do-it-yourself screener, where you can perform these activities using OHLC compare, where latest screener open equals to latest screener low, right? So this will help you to find all the stocks where the open is equal to open is equal to low, right? So look at this one, right? You'll find similar set of stocks where the open is equal to low, right? And then I mean, obviously you can mix and match other things at a point. For example, in this particular case, right, where if you join something more, right, wherein the 1 year, or maybe I'll go into days, right, low 20 days, right? So when I look at this one, what we have done is open is equal to low is there, and then we have added another strategy wherein we are saying that the low was indeed a lowest point at some point. Okay, what happened? 1 day low. Sorry? Okay, sorry. Oh, it's my fault, right? So 20 days low was made on the latest tick, 0th tick, right? So when you look at this, there's no stock. Maybe I'll make one tick to see if there's anything which can come up. So when you look at this, right, first of all, it is open is equal to low, and the latest or last 20-day low was made here, right? So sort of basically a very initial bullish signal, right? Looking at this, what we have done is we have found open is equal to low using custom screener, and the idea was to tell you that where it is formed also makes a lot of difference, right? Over here, if open is equal to low, or if at this point, it has less meaning because it's pretty much in the sideways market, right? It has a less meaning, but especially when it is not with volume. But when it is at a downtrend and there's a volume, it is very much at the low level, and open is equal to low. That means there's a negative sentiment. Negative sentiment is briefly breached here with good volume, right? So this could be a good entry point. So what you can do is not only open is equal to low, but you can also mix and match other filters from these places. Okay. So that was about open is equal to low, a powerful one. It tells you that the conviction at that particular trading period is pretty good, right? We have some examples created by our team. Let's use those examples to get open is equal to low, right? That will give you a better illustration. Of course, you don't have to be dependent on examples. Once you get used to the system, you don't have to be dependent on that. Open is equal to, okay, getting out here, open is equal to low on a 5-minute candle, right? We find quite a few stocks, right? Titan being one of them. So, okay, this was 74 ticks back. Okay, so going back in the history, this was, okay, it's not, okay, let me go to pre-screener and show you the same example where open is equal to low on 5 minutes on the NSE 500 on the, is it 74th tick? We have list up to here, right? Okay, sorry, my bad. I'll take you to the example, right? Same thing, going out here, open is equal to low, open is equal to low. So instead of latest, you are looking for 74th tick. Okay, so the team has found some good use cases, right? That means if you were looking at this 74th into 5, right, which will be about 1 day or 2 day, morning tick. So 74 is the morning tick, right? Morning 5-minute tick is what we are looking at on NSE 500. Now this is where the open was low in the start of the day. The example that we should be looking at is Titan, right? Okay. Okay, why did it change? Sorry. Huh? 76. It is 76, right? So over here, no, I'm not getting Titan or maybe Motherson. 5-minute stick, right? Okay, sorry, the example was a different one, my bad. Open is equal to high. What this one was showing was the opposite of that, right? So looking at that, going into Titan. No, it's not coming. Are you? Okay, never mind. So the point here is, right, what you can look at is, maybe a bot. Okay, so maybe the example that we have chosen was slightly obsolete because I think yesterday's trade has changed the ticks, right? But the point here is, I'm just taking you to anyone, right, where this particular thing has occurred, where open is equal to high. You see at the 74th tick, which is the starting point of the day, starting point of the day. So where is it? It is at this point, right, where open is equal to low. It was nearly open is equal to low, so it has actually gone up or gone down. The idea is more to tell you that how you need to look at these things and what is the meaning of this thing, right? Open is equal to low and open is equal to high, right? These are two very simple strategies, extremely simple strategies, which gives you a lot of information about the movement of a particular asset class on that particular period. Okay. Open is equal to high example. We have an example where it is open is equal to high, right? A bearish signal. Now it is not only open is equal to high at the time of the market, but also if you see, it is engulfing not only 1, 2, 3. It is multiple engulfing, right? The more the engulfing, the stronger this particular pattern is, right? So you can always filter this. Once this particular pattern is made, keep a stop loss somewhere around here, and then the price has actually gone down, and keep a trailing stop loss of last 3-4 days low. That will be a good point to trade on such kind of stocks, right? So very simple, very simple way of finding these particular patterns in top stock research. Powerful and simple, right? The example, the theoretical example that we had for open is equal to low is this particular point where open is equal to low. It was during the start of the market, and then market actually went up quite aggressively. Okay. Any questions on this before we move? Can you show open is equal to high? We just did that, sir, right? I hope that clears, right? What is P minus P74? P74 is the date. So it is a historical date, right? So when you see out here, this is latest tick. That means you are looking at the tick as it happens. This is previous tick, and then previous minus 2. So basically, if this is a daily tick, then it is Friday, yesterday, right? 13th of Jan. This will be 12th of Jan. This will be 11th of Jan, and so on and so forth. If it is weekly tick, then this is the latest week, then the previous week, and so on and so forth. Same thing goes with any of the other ticks like 5 minutes, 10 minutes, 15 minutes, and so on and so forth. Okay. All right. So there was a question on stock option OHLC. We don't have that, right? We don't have that as we speak, right? Maybe coming in later time frame, but we don't have it now. Okay. So this was very simple example of open is equal to high, right? A powerful signal. The next one is gap, right? Next one is gap up strategy, right? Now, what gap up does, gap up, gap down, right? Gap up is something wherein the price was trading, and it works best on the start of the day. Right? The best period to look at gap up or gap down. Of course, you can look at any other time frame also, at 1 hour, 2 hour, 15 minutes, any other time frame. But the best way of looking at gap up is start of the day, when in the previous trade, right, market was trading in a certain period, and then next day market starts much above the previous trading day range, number one, and it continues to be in that range. That means you can see a visible gap between these two candles, right? This is gap up. So what gap up tells you is basically overnight something has happened which is pushing the price upwards, and it is sustaining. That means there's a good amount of basically the buying interest which has come into this particular equity, right? Good number of buying interest which has come in the equity, and which is why this particular conviction is there in the market, right? A powerful signal. Again, you look at it, if it has with good volume, this should give you better confidence. If previous signals were a lot of dojis and sideways, right, which is not giving you a lot of signal, also good. Breaking previous resistance level, also very good sign, right? So you have to look at these things. This is typically gap up, where the price, this you can see a distinct difference between the price range from the previous day versus latest day. Okay. Now, when you trade on this, right, obviously this, like any other thing, also you need to look at the stop loss. The stop loss would be the lowest point at this level, right? Lowest point at this level would be the stop loss for you to trade, because not every movement will give you 100% results, but so basically anybody who is looking at this particular period need to keep a stop loss at this point. Okay. Taking certain examples on of gap up, right, from chart patterns, right? So where do we see gap up? There are multiple different places. For the most simplicity purpose, especially during if for you to get more familiar and get better, right? Go to chart patterns. Go to bullish candle. This is where the gap up pattern is, right? Look at the EOD maybe on NSE 500, right? You'll see that there are 3 stocks which are forming gap up, right? Now this should be your starting point. Now, apart from just telling you where the gap up is, right, it also tells you that is it with good volume. So in this particular case, right, gap up is happening with a decent volume. So look at this one, right? So there's a gap up, it is happening with a decent volume, right? So which not only tells you that there's a gap up, but the gap up is with more market conviction, right? The more market participation is involved in this particular gap up. This is one example. The second one, again, there's a gap up and with a lot of conviction in the market, right? So this will be good entry points in the stock, right? So this is one simple way of looking at the gap up. The second one is our DIY screener. When you look at the DIY screener, where you want to do it, 2 ways of doing it. You go to chart patterns, right? You look at any of the gap up, you'll find the same set of results on NSE 500, those 3 set of results. That's one. Number 2 is if you want to add another filter on top of it, right? It could be any other filter, right? It can be it can be let's say price above a certain moving average also, right? So maybe it's above 50-day moving average. So you can add multiple different filters along with the gap up. So this is second way of doing it. The third advantage of this one is in this particular filter, you can opt for either gap up or engulfing, right? So if any of the 2 patterns are created, you'll be able to filter this, right? So there are certain bullish engulfing patterns coming in, certain gap up pattern in. If you understand bullish engulfing, well and good. If you don't, we'll have a session on this one in greater details. Okay, so this is typically how you look at it. There's a third way of gap up, right? Now these are very, very theoretical gap up. Not everything will excite you, right? So what you can look for is basically in OHLC compare. When you look at OHLC compare, so latest close is greater than latest open, which tells you that it is a green candle, right? And then add another one, latest day low is above previous day high, right? So this will give you another kind of a gap up, right? Wherein so this is how you can customize gap up. Now if you want the gap if you want the gap between these two also to be at least 2%, right? A much solid gap up. So you can put, so if you just look at this one, it will give you any of the theoretical gap up, right? Any of the theoretical gap up. Now, if you are looking for much more serious gap ups, right, wherein the gap up has to be at least by a percentage. So what you can do is you can add a percentage out here. I'm giving you a 1% to see if there's any stock which matches this criteria. So now the Rail Vikas Nigam. So apart from just gap up, right, if you want to see that much more serious gap up, right, so what you can look at is basically this one, the gap up is better. Or what you can do is you can pause this one, and you can see that apart from gap up, is it going with a good volume, right? So basically when you see this thing, so the latest day volume is greater by at least 100% of the previous day volume, right? So when you look at this one, right, so it is giving you a gap up with good volume. So latest candle, okay, sorry, my fault, right? When you do this, so we couldn't find any stock which matches this criteria. So finding gap up and then getting volume also with that, okay, no records. So this itself is a very complex this thing, right? In the first place, we could get only 3 stocks. Then you add volume, we are adding more stringent conditions. So let's see if we can get it with 20% volume. No, so we couldn't find. So the idea is not only able to find gap up, but you can find where the gap up is happening, number 1. Number 2, you can add volume, or you can add any other indicators, right? You can choose from any of the stock basket or any other tick. For example, let's try to see if we can get it on our 2-hour tick, right? On 2-hour tick, okay, we have removed all those filter criteria right here, but you can do it on multiple different things. So gradually you can increment your query, fine tune your query, do some sort of back testing to see how it fits into the previous day or previous minus n days. If the strategy is good, right, then you can really apply it in your trading period, right? So again, taking an example of a very simple, since we have been mentioning about back testing, right? So a very simple example of bullish gap up, right? Running this, okay, couldn't find any. Bullish gap up, I am not getting that. Okay, let's go back. So there's none. Let's go into EOD. We find these 3 stocks, right? Now you don't know it, right? And you want to become master of this thing. You want to become master of this, right? So before you directly jump into any of the theoretical sessions, you attend it here or any other training institutes or books, right? The best thing is also look at sort of back testing, right? So there are certain provisions. You can add all the stocks to your portfolio. You want to buy, you create a portfolio, you want to buy equal quantity to see the next day, next to next day, how the stock is performing, right? So that's one way of doing back testing. The second thing is you have 3 stocks here. You go back in the history to, let's say you go P-4, run it, right? So as on 9th January, right, which all back, this thing happened, right? So there was a gap up, right? Did not too well because the market itself was not too good. Here the gap up was there and it is sustaining, right? So it's not only you can look at the gap up, but you can also look at the historical period to see after gap up or gap down how the stock performs, right? To give you better conviction, right? Over here there was a gap up and then movement is pretty good. So use this, despite the market was pretty on a bad note last few weeks, but if you see some of the gap ups give actually very good results, right? So before we move out to other sections, let me see if there's any comment or question. So time frame, you can use any time frame. Who is watching this live are interested to be traders? Yes, that's the intention, right, of you becoming. So please speak Hindi because some viewers belongs to Hindi house. Indofacts very much appreciate, आपका बिल्कुल मानते हैं. ये सेशन हम इंग्लिश में ले रहे हैं, हम एक सेशन हिंदी में भी लेंगे इन कमिंग डेज. थोड़े दिन बाद हम हिंदी में भी एक सेशन लेंगे, राइट? तो शायद आपको वहाँ पे हेल्प आएगी, बट अभी हम लोग का जो सेशन का जो प्लान है वो इंग्लिश वाला है. सो आज आप हमें वो करिए, बेयर करिए, एक प्रॉपर सेशन हम हिंदी में भी लेने वाले हैं इसका, राइट? हम टेक्निकल एनालिसिस से स्टार्ट करेंगे और फिर आगे उसमें भी ले जाएंगे, राइट? तो ओंकार अभी जस्ट थोड़े दिन तक वेट करिए आप, राइट. हाउ टू डू दीज पैटर्न्स, बुलिश, गैप अप, गैप डाउन इन वॉच लिस्ट, राइट. Okay, so how do you get these patterns in the watch list? Again, slightly deviating from this subject, but since there was a question, what you can do is you can create a new watch list, give it a name, demo 14th Jan, right? Create a custom one, go to the candlestick pattern, right? Go for gap up, add engulfing, right? Create the template. Okay, go to the template, add stocks to watch list. Let's say you're looking at all NSE 200 stocks, Nifty 200. So you'll get all those stocks where this thing has happened. So this is a typically watch list, right? You can create a watch list. So from your watch list, if you're looking at some stocks which are making bullish engulfing, so these are stocks which are making bullish engulfing, right? In this particular stocks. Okay, look at that. So when you look at candlestick charts, you'll see that bullish engulfing is here. So that's how you can use this thing. The example which I mentioned a while back, right, is basically once you create these things, once you have a screener, for example, gap up screener, right, gap up, right. So this is a gap up on NSE 500. These three stocks are coming. What you can do is you can create a template directly from here, gap up 13th Jan, that was the business day. Up. EOD, right? You can add all the stocks. So you'll see a new watch list is created out here, right? So when you go into watch list, right, this watch list is created. So you'll see three stocks. So next day you can keep on observing that a gap up was gap up happened here. And then what the price movement is, right? So that will help you with that. Okay, great. Stock basket, watch list, create more watch list. Swapnil, I don't think I understood your question very clearly. Can you be a little more elaborative on that, right? Also for the interest of the larger group. Okay, so that was gap up, gap down. It's just opposite of that, right? Where the stock opening is much lower than the previous day range. Now, there's a gap up runaway. Now, gap up means two things, right? Once there's a gap up, the stock is likely to move in that particular direction, right? It move in that particular direction, provided all those situations are pretty good, right? Or it may come back into the original level. Now, runaway is where there's a gap up and the stock continues to move in that direction, right? So we have a screener for this. Where the stock is making gap and it is continuously going in that particular direction, right? So how do we do that? We go into our DIY screener, do it yourself. Okay, go out here, gap up, runaway, right? So gap up, we are looking at gap up. Now what you can do is you can do gap up at a candle level, entire high-low range, or you can do only at the body level, right? Whichever you are looking at. So what we are doing is minimum 1% gap up on body, and the runaway is at least 0 to, let's say, 1 to 5 ticks. Let's say 5 ticks. I'll explain you what this is. So when you screen this filter, right, what it tells you is there was a gap up and it is running away from minimum 1 to 5 ticks. Let's look at the chart, right? So gap up was there and it is running away in that particular direction. The second stock, there was a gap up and it is running away. Now, what running away means is this gap is not filled. Till the gap is not filled, this is runaway. So this was an excellent signal. Just the gap up was good. There was a confirmation out there. If somebody had gone into this stock, till this, so depending on your aggressiveness, either you can put a stop loss here or you can put a stop loss here, right? Depending on what you're looking at. So this is how you typically find not only the gap up, but after the gap up, the price is continuously moving in that direction of the gap, right? So this is the filter what you are looking at. What we did out here, so we see that there are 7 stocks, right? Where the percentage of gap was minimum 1%. if you're looking at a higher gap at this point, so you look at it, all these stocks are at least on that side, right? A higher gap up. Now what we are looking at is if you see, some of you will say that this is not a gap up, right? What are you talking about, right? So what we have selected here was body, candle body. So the gap up that you'll see is on the candle body, right? If you're looking at the entire range, some of you would like to look at the entire range. So when you look at the entire range and run it, so you'll see one stock where the gap up has happened, right? So there was one stock where the gap up. So the entire candle range from high to low, from this high to low, there was a gap up. So you have a flexibility depending on what you believe, either the candle body range or the high low range. Typically both works really well, right? Both works really well. Depending on where you get comfort level, you can use that, right? So this is a range breakout breakdown. You can work on body range, or you can work on this thing. You can work on body range or HL range, right? Similarly, you can look for gap down, right? You're looking at a gap down for, let's say, minimum 2%. Market was bad, so let's try to see if we can get gap down on HL range by 2%. No, there's none. So let's see if we get 1%. So there was one stock, Bharti Airtel, right, where there was a gap down by minimum 1% and it is running down, right? So typically a very good signal, right? Very good signal, and it's there. So if you put a stop loss here, or depending on what you feel comfortable, some people would want to put stop loss here, some would want to put a stop loss here. If you are more conservative, then put a stop loss here, right? This is more theoretical stop loss, right? And even better is basically let's go into some of the historical patterns, right? Let's say we go into P minus let's say 5 to give you better perspective. Okay, maybe P minus 10. Okay, that's the only stock we are getting. Okay, so we're not getting any better quality stocks on that, right? Even going back into history. Right, so the idea is, number one, you can get gap up percentage you can define, right? Then also what you can do out here is basically, first is gap up, which we are doing on a EOD tick. Okay, if you are looking at intraday period, what you can do is, the gap up is there, and then what you can do is you can set a runaway on another tick. For example, there was a gap up here, right? There was a gap up here by 1%, and then it is running away for minimum 1 to 5 minutes tick. So let's run this one, right? Okay, no records, right? Or maybe let's put 30 minutes candle to see if they can get anything. Okay, gap up we couldn't get. Let's see gap down, or we relax a period a little bit more to see if there's none. Okay, gap down. These are extremely rare patterns, right? So if the more conditions you add, the more this thing more difficult entries and more solid results are. The idea of a good screener is it should not give you results more than 1 or 2, right? On your strategy. If it gives you more than 1 and 2, then again you have to spend a lot of time, right? That means your strategy still requires a little bit of fine tuning, or you still depend on your manual judgment. Okay, apart from the screener. So this is typically gap up or gap down, runaway. Gap up has happened, number one, and then it's moving in that particular direction, that is gap up. Now our analysts have found few different strategies for stop loss. One is the stop loss at this point. Second is stop loss if it is really moving away, right? So another strategy could be is that it is trailing up, right? So keeping a stop loss here will forever be a stop loss, right? Not a good point, and you may lose certain of your benefits out here, right? So a trailing stop loss can be 4 candle low, can be a good trailing stop loss, right? For example, a trailing stop loss would have hit here if it is a 4 candle low, right, at this level. So you would have made a good profit out here, a small profit out here, right? So that can be another stop loss. So play with your stop loss candles, theoretically either this level or this level, or you can fine tune your stop loss like a P minus 4 low, right? Can be another stop loss for you. Okay. Okay. Can we customize gap up, gap down with Trendline and channel? Yes, we are working on that, right? We are working on that. It was the response of Rakesh query. Okay, great, Swapnil. You have helped to answer a response. Thanks for that. Right. So going into the next one, right, which is so same like gap up. There's a gap down, runaway, right? Again, a very good opportunities. Look at the volume or some of the previous support and resistance levels, right? So in this case, right, there was a typical support level down here, right? So apart from this stop loss, right, what you can also look at is there was a zone of consolidation in this phase, and then gap down happened. Right? So it should give you much better quality of comfort, and also it's coming with a lot of market conviction. Whatever that stock is, TCS on that day, I don't know what happened on 11th October, but looks like there was some bad news, right? Or some major event which has happened, which is bringing the stock down, right? Also, guys, what happens is, apart from this natural movement of the stocks, right? What happens is, when technical analysts see these things, right? Then apart from the regular market force, technical analyst also tries to bring the price down. So there's a lot more conviction also along with this, right, of bringing the price down. So which will further move the price down. So it may not be typical market force. It's the technical analyst sees this as an opportunity and tries to bring it down. So also look at those things also, consider those things also. Okay. So the second is gap fill, right? Now, when you look at the gap, right, not every gap, unless it's with strong conviction, right, not every gap will result into runaway, right? It could be one-off gap. It could be as a result of a big institution investor coming and buying this thing, or a rumor or a news, typically rumors, right? Typically rumors. If it is a rumor-based gap up, or a small news-based gap up, right, then there's a very good chance that gap will get filled, right? Gap will get filled. So we have a screener to find that thing, right? Gap fill. So what this does is basically it tells you that all the stocks, I'll keep it this one, right? 1% gap, and then candle body gap fill after minimum of let's say 3 ticks, right? And sustaining for at least 1 tick. Okay, so okay, no stocks. See 1 hour. Okay. Okay, gap downfill. Let's see if there's something. Okay, let me reset everything and start from scratch. Gap fill, right? Gap up fill after minimum candle of 3 ticks and sustaining up to 1. Okay, no stocks. 1 hour, no stocks. Okay, going back to the daily gap down fill. Okay, so we can find one stock, ITI, where there was a gap down and it is filling, right? So there was a gap down and it has filled, right? So it is thick on a body. There was the period, sorry. There was a gap down, body range, HL range. Okay. ITI. Yeah, so there was a gap down, right? And then that has actually got filled, right? So the gap period was 23. I missed on this one, right? The gap period was 23, right? So on 23, there was a gap down, and that gap got filled actually, eventually, right? So once the gap is filled, right, it has a tendency of going up in that particular direction. Okay. Let me also try to find another example, maybe on a 30 minutes period or a weekly period or a 15 minutes period. Not too many gap fills are there with this condition. Maybe after a period of minimum, let me sustaining up to, let's say, 3 ticks. Okay, so again, ITI we saw. There's another one, Nuvoco. So again, there was a gap down and it filled, right? So when you look at it, the gap down was on 23rd of December, right? So 23rd of December, there was a gap down and it actually got filled, right? So this, when the gap gets filled, right? When gap gets filled, it has a tendency to move in that particular direction. So all those news, noise, which was there, right? Actually got over and it's moving in the other direction. Okay, it's going in the other direction. So sometimes looking at the gap is number one. Looking at the range breakout or moving in that direction is another one. Third one is the gap getting filled, right? Once the gap gets filled, it has a tendency of going in that particular direction. Now, sometimes you would want to know that is the gap about to get filled, right? So there's another screener for that, which we call as a gap up fill potential, right? So where the gap, minimum gap is 1%, right? And gap sustaining, that means from the gap and to the latest period, there are minimum 3 ticks and it is within 1% of the fill. Okay, let's try to find one. So we find Trident. It is on 27th of December, right? When you look at the 27th of December, so this is where the gap is there. No, this is up, right? 27th. So this is where the gap was there. And then gap is about to get filled. That means it is about to get to this level, right? It is within 1%. So once this closes down, right, it has a tendency of going down, right? It has a tendency of going down. So this is what we mean by gap fill potential. This particular level is not yet breached, but it is within 1% of that gap, right? Similarly, what you can do is you can fine tune on other periods, right? You can fine tune on other periods. Maybe we increase it to 4 period to see if there are any other stocks, same stocks. Okay, what we are looking is candle body range. You can also look at the high-low range, right? So let's look at gap down fill potential to see if there are any, right? We see Wellspun. The gap happened on 6th, right? So gap down has happened on 6th and it is on the verge of getting filled, right? On the verge of getting here. So this can act as an alert. This can act as an alert for you to get into the stock, right? Now this level will act both as support and resistance. First, it will act as a resistance. So this is the level. Unless this level is breached, right? Don't enter, right? So there are a lot of chances there where it might go here and come back. But once this level is breached, with certain confirmation, you can look to go for a long trade. Okay. So there was an example. So now this is where, as the example says, right, this should act as a support, right? That's where you can get into long trade. If this is breached, if it is retracing from here, then that's a place of buying it, right? Again, another level is the start of the gap level that should act as a resistance. Once that is breached, you can go for further long position. So first entry can be here. The second, anybody who has missed this bus, the second entry would be around this level, right? So if you're looking at the body, then it should be at this level. If you're looking at the total candle, it should be at this level. Okay. So same example is gap down, right? Very similar to what we have covered, right? In terms of time, I think we are pretty okay, right? Going as per plan or as per timing, right? Same thing is gap exhaustion, right? Not every gap will result in, not every gap will go in that particular direction. There are a lot of cases where the stock might go below the gap, right? For example, typically in the rumor space, right? When there are a lot of rumors, right? That something is likely to happen, and there's no confirmation about that, you will see that there's a gap up and it goes up. When the rumor goes, or when the news actually comes out, right? It turns out to be fake, right? Now there's much more stronger rejection of that particular thing, right? People feel little cheated or feel, bad about it. They want to simply move away from that, right? Because it's not giving those things. So typically on a rumor, news-based, those kind of things, it's not that it's always rumors. It can be natural phenomena also, right? On the stocks, but typically rumors, right? So what happens is there's a gap. It has gone up, runaway, couldn't sustain. You'll see plenty of signals, right? Where the strength of the gap is not so good. and then it eventually comes down to the first. So first stop loss, if you are looking at a trailing stop loss, you'll hit much earlier, right? The second stop loss is this one. The third stop loss is here. That's where you will see that, it has come down, and this will act as a small pullback, possibly small pullback, and it's coming back again. Now, depending on where you are, either you can sell at this level or you can sell at another confirmation level, and then it's actually coming down, right? So this is exhaustion of the gap, right? This is exhaustion of gap. The screener for this, right? The screener for this is basically gap fill, what we have just seen, right? Wherein it has actually so gap has filled. Now, not only 1% gap was there, right? It's not only filled after whatever interval, but it is after filling, it is sustaining for, let's say, 5 ticks, right? Or maybe 2 ticks, 3 ticks is good, right? 2 ticks is even better. Let's see if there's anything we can get. Nope. Okay. Body range, gap down fill. Let's see if there's any stock which matches the criteria. Again, the ITI stocks, the stock that we see. The gap was on 23rd December, right? 23rd December. It came down, and then a nice tweezer came out here, right? And then it started moving out, right? Starting moving out, and it has not only filled the gap, but it is sustaining also, right? From that level, right? So this is how you'll find it. So how do you utilize this particular screener or strategy? Is for a reversal, this thing. A reverse of gap movement, right, is where you can get into the trade. In this particular example, what we have found is, or what the system has found is, it's also going with a good this thing, good volume, right? Before we move to the next one, let's see if there's any question or two. Request you to extend these screeners to support resistance, metal, commodity. We'll see that. We'll do there, right? All right, Simha, thanks for mentioning. It was a quarterly result of TCS on that day, right? Screen frozen. If others also feel the same way, let me know. If it is one-off case, then also tell me, right? Screen frozen is taken. Okay, quarterly results. Request to add these screeners to metal. We have just discussed. Okay, rounding pattern and cup. Yeah, we'll have a session on that on 4th of Feb. Right? How important is volume for support gap? See, to me personally, okay, so basically purely by the textbook, right? Price action is only price, nothing else, right? But to me, adding volume gives you a lot better comfort and confidence, should give you a lot better comfort and confidence, because it not only tells about the gap, but also it tells about the market participation, right? So it tells you about market participation, how convinced the entire market is on a particular moment, right? So it is important. It is very important, volume, right? So remember, guys, what we mentioned, right, is what you should be looking at is number one. Number one is that single candle, right? Now there can be a combination of candles, which we'll be having a session again next month on candlestick in deep dive. We'll try to cover as many patterns as we can on candlestick, right? That will tell you that combination of patterns. 2 candles can give you a different results. 3 candles three white soldiers is a different pattern. 2 bullish engulfing is another pattern which is made of 2 candles, right? So 1 candle can give you some information. 2 candles can help you to do even better. 3 candles, 4 candles, previous support levels, previous resistance levels should also give you better confidence, right? Over here, there was some sort of support level out here, right? It has broken that. And then the next level, what you could be looking at is these levels, or perhaps it might even break this level, looking at the conviction on this particular stock, ITI, right? It might even break this because it comes with pretty good, it has discarded the previous gap. It has given a gap up again with good volume. Just looking at one candle, it gives you a lot of information. Keep a first target here, second target here. If this breaks, you can go even for a higher level for the next level of targets. Can't find these targets here, you can use Fibonacci, or you can use other mechanisms for the target, or till you see another thing, right? Once it crosses this level, then you look at the momentum. You look at the momentum, trailing stop loss. It has a potential of crossing this, right? Not saying that it will, but it has a decent possibility of crossing that level. Okay, so that was this thing. So any questions before we wrap up? We are pretty much on time. So sessions of candle is a good idea. Yes, we will have a very detailed session, trust us. Is this session free or paid, Kishore? This is open for all. So if any of your friends are interested, they can join the second session. What we are trying to do out here is basically keeping each session as independent as possible, so that somebody who comes late, they can also come and attend this thing. At any point you can come and join the session. Each one, the next set of sessions will be purely on strategies, right? Purely on strategies. We'll have head and shoulders. Some of you mentioned patterns. We have quizzes. Somebody has mentioned pin bar. Many more strategies, breakout, breakdowns, range breakouts, many more strategies we are covering in the afternoon session, right? So you can always invite your friends if they are interested. How will we get to know that you are interested is because if you post your comments, if you like it, then that will be the motivation for us to bring more sessions. If there's not much of like, then we'll say that this is one of the sessions that does not excite a lot of you. So I mean, then accordingly we'll see. If we are motivated, we'll bring lot many more sessions, right, on almost all aspects of technical analysis, price action, fundamental analysis, chart patterns, indicators, and many more stuff, right? Many more advanced stuff, which we think we have screeners for it. We'll try to cover them. Okay. What is the future additions that we are doing? Number one is basically, as RF has mentioned, right? 1 minute candle, that is one thing. The second thing, what we are looking for here at this stage is we are working on, so what you have seen in the screeners are basically time machine. These are not typical back testing. These are time machines. You can go way back in the history to look at the patterns. What we are working on is 3 additional, so this is part of back testing, right? We are working on 3 additional back testing tool. Hopefully in next couple of weeks, we should have at least 1 or if not 2 available to you, right? That should give you a lot more comfort level in terms of doing things. So it can either be a stock based or it can be a stock basket based, right? You can look at the inverse of stocks where you can do the back testing, and many more features are coming. So these are really very big ticket items. Small ticket items, one of them which we picked from here is somebody from the previous session mentioned that the stock name was not so obvious out here, so we tried to do it. If you find this to be good, we'll definitely get there. VWAP indicator, yes. So similarly, if you see that we have a lot of technical indicators out here, right? We'll incorporate many more indicators in coming days. Those are small ticket items, right? In terms of screeners, we have quite a few screeners. We'll be adding many more screeners out here. That will be again big ticket item. If some of you are new to this session, right, and very new to technical analysis or this part of the world, we would recommend you to look at the strength indicator, right? Look at technical strength of the stocks. Look at all bullish stocks at the end of the day, right? You'll find list of stocks which are really bullish. This uses lots of our learning, which we have put back into the system, will help you to filter out the stocks much faster. So in this case, right, Mahindra CI looks most bullish in NSE 500 world, right? When you look at the stocks, finding such stocks chart by chart is very difficult, right? If you are looking at one indicator, perhaps that indicator may not give you this, right? What we have done is we have added 100 plus indicators based on all our learning historical patterns. Found this algorithm. We keep on enhancing this algorithm as we see its fit, right? So you'll find very, very bullish stocks out here, right? Now this is again a bullish stock, right? Looking at all these things. So these are some of the bullish stocks. Despite the market is so bad, we are able to find quite a few stocks which are very bullish, right? Same way, what you can do is you can find strong bearish stocks, right? If you're looking at FNO world, right? Let's look at FNO world only, right? If you have that level, if you have that thing in you of finding very, very shorting, not that something which we recommend, but if you are confident, then this could be a good place to start looking at the stocks. Like Wipro has broken many support levels, right, out here, and it's still going down with good volume. So the lot of work which you do with your manual research, this particular tool will help you to find that, right? Very, very bearish stocks. When the market is bearish, much easier to find bearish stocks, right? When the market is bad, much more difficult to find bullish stocks. That's why in bullish stocks, you'll not find that good quality stocks, but in bearish. Now, one of the advantage of technical analyst, right, is despite where the market is going, you will always find a stock or two. The market is not so good almost since 1st of December, right, for whatever reasons. We don't want to dive into that, but you'll still find that you will have some of the entry points out here, right? So looking at these stocks, now this tells you that MCX is bullish, right? So when you look at MCX is after all those things, right? Nice pattern, rounding bottom, a variation of it, right? Is formed and it's going up with a nice volume, right? Likely to breach this thing, right? It's defying the overall bearish market of Nifty or basically BSE, NSE, right? Or Indian markets, right? Again, you'll find, so the advantage of technical analysis, right, is of course fundamental analysis also does this. The advantage of using such screeners is wherever the market is going, you'll find some of the stocks which can give you favorable signals, right? Entry sign. Not that you should purely trade on these things, right? You do back testing unless you feel comfortable, convinced, do the trade. If you are not convinced or you need some more of these things, inputs, talk to your analyst friends or talk to your mentors, right, to see whether this is a good entry point, exit point, right? All these things are fallible. That means technical analysis in the previous session, right, as I mentioned, even 60% of accuracy is considered to be extremely good. If somebody says if they give 80%, 90%, I don't know what to do, right, or what to say, right? 60%, if you can reach that level, it's an extremely good level. It's an extremely good level that you can make, right? Ride the wave, cut the stop loss, right? That's the philosophy. If 60% success is there, that means your losses are limited, and the profit that you are making will give you very, very good quality returns, right? Stop loss maybe 1 to 5, 10, depending on the time frame that you do. Profits can give you 1, 2, 5, 10, 20, 30, 40% returns, right? Or even higher, right? So trailing stop loss can give you much, much higher returns. So that's the idea of this particular thing, right? So it was more of an introduction of some of the basic concepts of price action, some of the screeners on the price action, very, very simplistic ones. In the afternoon session, we'll have much more detailed session, right? I'll take a moment to see if there's any question out there. Term head and shoulder. Yeah, so head and shoulder, we have a session, Rakesh, in the afternoon. We'll work on that. So, right, head and shoulder is there. On Coal India, we'll try to take that example, right? Request you to arrange a screener navigation session for Prime members, okay? We'll do that. So next week, on 21st, we have a session on product overview. That's where you'll see a lot of these things, right? Will this session recording be available on YouTube? The answer would be pretty consistent what we have been giving. We took 7 sessions on last week of December. We were able to retain 3. Those 3 were published. Some of the sessions, especially the one which was on 24th, was a very good session. The feedback was there. Unfortunately, we could not create the YouTube recording or the recording, right? So depending if we can, we'll do. The second thing which will help us to motivate the recording, right? There's a lot of work required to do all these things, viewing, editing, and all those kind of things. It purely depends on how much interest you guys show in the session. If there's a lot of interest which is coming in the session, obviously that will motivate our colleagues to do it more or to take better care so that the video quality and everything is good, right? So it all depends on that. So if you like this session, right? If you like this session, do join in the afternoon session. Do join in the session. Share these sessions with your friends, right? So that there's more participation. The more the participation, the easier it is. The sessions is purely to share the knowledge. I know similar sessions, tens of thousands of rupees are charged for such things, even without providing the tool access. What we believe is giving this thing, and no better day than a Makar Sankranti or a Pongal or a Bihu, or there are many, many more names for this festival, right? Start of the new year to a lot of people. So hope with this session, the direction of your trading or understanding of technical analysis, price action will get better, right? So if there's no further question, we'll wrap up out here, right? We are 3 minutes overdue. The second session may go slightly longer than 2 hours, right? But trust us, there are lots and lots of good patterns, and that's where we want more participation in the session. Feel free to ask questions. I'll remember the head and shoulder, but if just in case I forget about it, Rakesh, please mention again. We'll try to get that again. Okay. So with that, we wrap it up. Thank you very much for your patient hearing. Nice interaction with us in form of session. And apologies for the small glitch that we had in the session. That's something which we'll try to avoid as much as we can going forward. Okay. So thank you, and we'll give you a good solid lunch break of 1.5 hours. So have a good break, and then, or if you want to have a small nap, go ahead and have a small nap, refresh yourself, and join us back at 3. Yeah. Okay. Bye, guys.